Welcome back. Calgary-based Keyera, the energy infrastructure company, will buy all of the Canadian natural gas liquids business of Plains. Plains is a Houston, Texas-based pipeline company, and Keyera will also acquire some assets from Plains in the United States. It's a $5.15 billion cash deal, and Keyera stock is up on the news today. For more on the acquisition and Keyera's futures plans, we're joined now by Dean Setoguchi, President and CEO of Keyera. Dean, thanks a lot for joining us. This is a big transaction. First of all, describe what Keyera has agreed to purchase here. There is 1,500 miles of pipeline infrastructure with throughput capacity of 575,000 barrels per day, storage capacity of some 23 million barrels, and additional assets in processing, loading, and logistics. You'll do a better job of describing it all to me. Do so, please. And what is the geographic footprint of the assets?
Yeah, thank you for having me on your show today, Paul. We're very excited about this transformational acquisition for Keyera. And as you summarized, it comes with a lot of key energy infrastructure, primarily related to natural gas liquids. So what we're purchasing is Plains' Canadian natural gas liquids business. And primarily all the assets are located in Canada. There are a few assets in the United States, but I would say they're relatively small compared to the main business. And what we like is that it's going to bring a lot of scale and efficiencies to our combined businesses, which will be great for our customers and also our shareholders. But it's also going to give us, and what's really important in our business is to access market. We are a supply-based basin, and to be able to access high-value markets is critically important. And the Plains' infrastructure, which spans through Saskatchewan, Manitoba, and Ontario, and into the U.S., enables us to reach those eastern markets. In addition to being able to export product off the West Coast with some of the commercial arrangements that we've done recently with AltaGas. So it gives us basically an east and west access to market, which is critically important for our business and our customers. Is it accretive to near-term earnings? Yes, it's very accretive. We certainly see a lot of synergies between the combined companies. We have guided in our first full year that we will have mid-teens distributable cash flow per share, which will be great for our shareholders. So this is a big move up in scale for Keyera, correct? Are you able to quantify that at all? Yeah, right now our enterprise value is in the $13 to $14 billion range, and this will take us closer to $20 billion. So it helps us scale up, but you know, our objective is not just to grow. We want to make sure that we build a more competitive, more efficient footprint, so that again we can provide more competitive services for our customers, and this is what this acquisition accomplishes. What kind of growth is Keyera aiming for in the midterm, and what kind of metrics does it target? Yeah, well, what I'd say is that our base business prior to this announcement is very strong, and we've delivered strong results. We've guided 7 to 8% fee-for-service EBITDA growth out to 2027, and we're very confident we can deliver on that. In the last 2 months, we've announced about $1 billion of new projects, including an extension to our KAPS NGL pipeline, which will extend to the BC border, accessing Montney barrels all the way from BC into our core at Fort Saskatchewan. And at Fort Saskatchewan, we're expanding our fractionation complex with 2 frac expansions. So our base business, we're poised for growth. This acquisition is incremental, and it's going to be a big step change. So above and beyond the 7 to 8% fee-for-service EBITDA growth, again, we're going to also achieve mid-teens accretion right off the bat from this transaction. And incremental to that, we see a lot of other great logistical, operational, and commercial synergies that will continue to deliver in the future as well. Synergies means cost savings. How will you achieve those cost savings? Yeah, some of them are cost savings. I mean, we have similar businesses, so I think we can be more efficient, in terms of managing the combined platform. But there's certainly going to be a lot of great operational synergies as well, where our frac complexes are separated, they're side by side, and they're separated only by a fence. So we think that there's going to be great operational synergies where we can provide a more reliable service for our customers. We can utilize our combined storage positions more effectively. And we think that we can be more effective with our rail logistics, where right now we both have very large rail fleets to move products. And we likely will require less rail cars. And again, we'll be able to get product to market more efficiently.
The company, your company, has announced a $1.8 billion bought deal offering of subscription receipts. That looks like the issuance of new stock. Each subscription receipt entitles the holder to one common share of Keyera upon closing of this transaction. Are you taking on additional debt? Are you borrowing to make this transaction happen?
Yes. Well, first of all, the equity financing went very well. It was well oversubscribed. And we've had tremendous supports from our banks to offer a bridge financing. But over the next several months, we'll also be issuing some medium-term notes or bonds to basically put in a long-term financing structure for this deal. I'm really pleased, though, that with the financing package that we are going to put in place, our balance sheet will still remain very strong and certainly supportive of our BBB ratings by DBRS and S&P.